Good evening, everybody. Tonight, I'm going to use tonight as kind of a illustration, or I guess a subtle promo. Not this weekend, next weekend. We're going to be doing our 2-day training on the candlesticks, starting from A to Z. But I am going to be doing a lot more of the emotional aspects to the trading using the candlestick signals, as well as the expectations. And the reason I am doing this is because today, even in the our chat room, somebody posted in there 4 or 5 symbols that had not worked well since August 1st. And so their question was, should we be resetting or doing another strategy? And I looked at them, and they all fit into the parameters that when they started out, they were good buys. But at some point along the way, they had reversed. So not only is the candlestick analysis excellent for finding when it's time to buy, but it's also telling you when it's time to sell. And that's where most people kind of lose, lose grasp, I guess. I know that 1/3 of the trades that I put on aren't going to work. I also know 2/3 of the trades that I'm going to put on will likely work, but they may only be up 0.3%, or they could be up 300%. So part of using candlestick analysis is analyzing when trades are working and when to be back out of a trade. Because there's only one total to work with, and that's the amount of money you have invested in the market. So if you've got money in the market, you probably want to have that money going to the most profitable application as possible. Not every trade's going to work. So if you understand that, you can't just pick stocks that go up. That's right. As who was it? W.C. Fields said, investing's easy. You buy stocks that go up. If they don't go up, you don't buy it. So, anyways, we're going to be going through the thread of not only identifying what stocks or what signals and patterns work, but also the analysis of what you do once below the T-line. The transportation index held up above the T-line, trading flat, and the NASDAQ traded much lower. So what's the logical analysis of what the market's doing? The market's probably just moving in a sideways mode, with some sectors moving up right now and some sectors moving down. So the advantage we have with our candlestick analysis is that we can analyze which sectors are moving up and which ones are moving down. So if we know that the market is kind of waffly, meaning the NASDAQ stocks are heading down and Dow stocks or the bigger stocks are heading up, we can at least make a game plan or an investment plan that utilizes both long and shorts. Okay, before we do that, let's take a gander here at the Steve, yeah, get with me tomorrow. Back lower after trading up here. This is the October contract. So what's the first assumption? Is that maybe the oil stocks aren't going to be acting very strong right now. Gold, as you can see, is pretty much trading absolutely sideways. So what's that tell you about gold stocks? You probably don't want to be in gold stocks right now. Now, things like Labu selling off hard. Right now, it looks like the biotechs are selling off. We can still use the very simple signals and patterns that we use every place else. And this is why the two-day training is very comprehensive as far as not only educating you on which signals and patterns work effectively, but how to use them in combinations with each other. For example, this right now is a bullish engulfing signal telling we have an uptrend until we have a dark cloud. This is a very simple trade right here. You have a bullish engulfing signal occurring in the oversold area. You have a dark cloud occurring in the overbought area. It tells you when to buy and when to sell. Today, we had a Doji yesterday. Today, prices gapped up. And where did it gap up to? Right here to the 50-day moving average. And then started trading positive. Why was that something to go after even though it gapped up? Because we already knew we had an inverted hammer Harami. Harami tells us the selling has stopped. The inverted hammer gives us an extremely high probability trend reversal, like 95% or greater, that if it opens positive the next day, we're going to be in an uptrend. So, and then with a Doji gap up, your best friend, through the 50, this puts you in just knowing the simple trading rules, trading patterns. And again, this is not having to learn formulas, analyzing what everybody else is doing based upon their analysis. So, again, every time we put on a trade, we know the probabilities of being in the right direction are highly in our favor. The other side of that coin is we also know that probably 1/3 of our trades aren't going to work. When we come out of a bad trade, it's not because we did anything stupid or we analyzed wrong. Probability said that trade's not going to work. Close it out and move on to one where the probabilities are in your favor. So what I'm going to do is kind of go through some of the positions that we have and why we have them based upon simple trend analysis. OCUL is one that we're holding on to, and it's got one very simple parameter at this point. After it kind of broke out through the 50, what we do is stay long as it stays above the T-line. RRD, another one that had G-type day followed by a gap up. You know, it back and filled a little bit today, still implies that we should be in a 45 degree to the upside. Of the logic of candlestick analysis. The graphics of candlesticks is the investor sentiment at places everybody else is watching. Notice we have kind of an evening star signal, a big up day, a doji, and then a down day. If intraday move below the T-line, sell, or wait for it to close at or below the T-line. No, if it trades below the T-line, you close it out, because the probabilities have gone against you. As soon as you close or start trading below the T-line, in a case like that, you close it out. What's the worst case scenario? You close it out, it trades down here, then turns around and comes back up. You can always buy it back, knowing that if it's going to close above the T-line, you want to be back in it. BZUN. So BZUN was a very clear-cut example of a candlestick sell signal in the overbought condition and a close below the T-line. What are your probabilities when it closes below the T-line? I thought this was a day trading pattern seminar. Pretty much a trading today. Yeah, it's kind of MP saying, yeah, everything that's being applied here is being applied for day trading. So I'm just getting right now into the different patterns. Yeah, we did another day trading a few days ago. But this is going to be kind of day trading using the signals and patterns to tell you when what to be doing. So this is why I've kind of incorporated it into what we will learn on a 2-day training, that if we know we have a doji and we know what our simple doji rule is, which is the price is usually going to move in the direction of how they open it after a doji. When it opens lower, and you can see that it opened lower and failed at the 50, that becomes your day trade. Now, for the day trader, yeah, obviously you're moving in the right direction. That's the exact reason the email says new day trading say you can use tomorrow. Yes, you can use this tomorrow, and I'll show you a few MPs. This is, yeah, we're getting there. MP, you're going to, yeah, this set, you'll see. Yeah, these signals, David, work for any time frame. If you go to the very basic definition of a candlestick signal, it's the accumulative knowledge of everybody buying and selling during a specific time frame. It works just as well on a 1-minute chart, 10-minute chart, hourly chart, monthly chart. It's all the same. So part of this, and I'm kind of skipping over this MP, that if I saw this doji right here at this level with stochastics up here in the overbought area, that if it opened lower the next day, I can be shorting it immediately. And we're going to be getting to a few more of these here. So just kind of sit tight. Matter of fact, we're probably going to keep everybody way over time like we usually do. So part of that day trading was based upon this type of pattern. As far as a swing trade, we already knew on Western Digital that we had this doji gap down. So we had a doji yesterday that if we were going to swing trade, that became a good trade. Now, if you're a day trader / swing trader, what's our simple rule of the doji? It's going to move in the direction of how they open after a doji. In this case, when it opened lower, what type of pattern can we expect immediately? A bearish doji sandwich. That gives us a lot more confidence to start shorting this immediately versus having to wait for any confirmation. Because of this pattern, the doji sandwich. That same scenario no, it wasn't on this one. This one was more based upon knowing what everybody else was watching. We recommended shorting Weight Watchers because it was in a downtrend. Here's a case where, same scenario, look at your doji sandwich, that when it opened lower, it started trading lower immediately. Now, this is the type of thing that we try to teach everybody. Notice this shooting star gravestone doji, and it opens lower the next day. The stochastics start to roll over. The probabilities are extremely strong that it's going to trade lower. And if it's going to trade lower, where do you think your first target's going to be? Right, at least back to the T-line. So that makes it a high probability day trade. A doji the next day. It may not have, as a day trade, you see this setup. You know that if it opens lower the next day, you can be shorting it immediately for a day trade and or a swing trade. So what you're really seeing here is you've got so many setups that you can either day trade it And if you're day trading intraday, at least you know the direction of what the price move is going to be. So if I was shorting this and day trading it, meaning I was probably going to be in and out a few times during the day, I can go to, that's the 15-minute chart. Well, this one was pretty steady on the way down. But I can go to my 10-minute chart. That's still pretty steady. I'll get back to a day trade chart setup here in a minute. Okay, so here is your day trade setup. ATHM. Below the T-line, came up. If this traded lower tomorrow, it tells us our downtrend is still in progress. You can short this immediately because it's been giving you a downtrend, and here's one that's probably even more plain to see. Yelp. You can see the dumpling top. You can see the bearish confirmation, the Doji. So if this opens lower tomorrow, we can expect a bearish Doji sandwich. And if this trading day is the same magnitude as this trading day, that means our likely target is right down here to the 200-day moving average. How could we identify which close above T-line will work good? Because it's usually going to be based upon whatever candlestick signals you saw prior to that close right there at the T-line. So here's a Doji sitting right on the T-line. What's our simple rule of Doji? Hey, they're sitting right on the T-line, close enough to it. If it opened lower the next day, which direction is it going to move? It's probably going to move south, which means it's likely going to come back down through the T-line. So if you're day trading the biggies, like Netflix, you can see where this failed. Right here at the 50, and then a big down day through the T-line. The Candlestick's heading down. Today it did a Doji. Simple Doji rule. If it opens lower tomorrow, you can be day trading this to the downside. Again, expecting a day maybe of that same magnitude. Tesla, right now I would use this low right here. If it came down through there, that tells us our downtrend is still in progress. Apple closed right on the T-line after a little bearish left-right combo. Again, remember, a bearish left-right combo is a Doji followed by a bearish engulfing signal, one of your strong reversal signals. Apple closed right on the T-line. So what's our simple analysis of this, getting ready to trade this, either on a swing trade or a day trade? If it opens lower, it's telling us after the sell signal they're not holding at the T-line. You can start shorting it, especially with your stochastics heading lower. Again, this is still all based upon your analysis of what's happening to the signals. Notice how, let's see, I want to do, I forget, we had drawn a trend line that came right up through where, right here, hit the top of that trend line, and then it started selling off. Today it closed below the T-line. Another one that if it opens lower tomorrow, you can be shorting it. Let's see, we did level. Now, so here's what is going to be the evidence of higher probability trades. This isn't it. Somewhere right up here was a trend NVIDIA just hit the top of that trend resistance level. I know you use 8 exponential. What stochastics are 12.33, and that's nothing set in stone other than 40 some odd years ago. No, that couldn't have been. Years ago? Hardly that old. I sat down. The normal, when I first started investigating candlesticks, was 14.55, but that was a little bit slower than what I wanted, so I just tweaked it one night and said, all right, where is the bottom when a bottom occurs, and where's the top when the top occurs? So I did 14.31, 12.5, 2, and finally ended up with 12.33, and the decades rolled by. Yep. And then, so they've worked again, both for my day trading as well as my swing trading. All right. So the reason I wanted to show this is once you hit a resistance level and it starts selling off, close out the position. Somebody asked me today, when it was trading a little bit lower, should we get out of KN? And it was holding up well, and I said, wait to the end of the day. But what I have discovered is, look where your fry pan bottom breakout should have occurred. It failed, and then it traded lower. So what's the most prudent thing to do at that point? Close out the position. Why? Because if this is a pattern that told us the bulls were taking control and they fail to break out, you don't have any probabilities in your favor. You've got the prospects of something like this happening. IOVA. Kind of the same scenario. For some reason, there was, it was this. Wasn't this. It was this. I got right up here to the top of this trend and failed. Close out the position. Because that is observe the obvious. When it got up to the top of that trend channel and did a doji and then sold off, what did that tell you about the uptrend? It wasn't there anymore. Do you have scans for fry pan bottoms? We do. I don't have them right here, but that's, Carl, that's something that people in the chat room during the day can get to you. The only reason I don't have it is because I usually recognize a fry pan bottom well before it's setting or while it's setting up. So I just put it on my watch list. Yes, I think it is the TC2000 code for a fry pan bottom. All right, so this again, use the term quite often, observe the obvious. When it hit a resistance level, we started seeing sell signals. Cast iron or frying iron, I think they want to call it a walk. Micron. Observe the obvious. When it hit the 50-day moving average and did a doji and then opened lower the next day, that was immediate evidence that they weren't going this direction. When they started trading it lower, that was time to close it out. What's the worst case scenario? If it turned around and came back up to the 50, you could always buy it back. The fact that once it hit this resistance level and started doing sell signals, and then a close below the T-line, told you it's time to be out of this. Probably you would have been out right here. When it came back up, you could always get ready to buy it back if it traded positive. But the fact that when they failed at a major resistance level that everybody else can see, and again, this is the advantage we have with candlestick analysis, is that we can see exactly what everybody's decisions are at levels that everybody's watching. So that doji immediately told us there was indecision when it got to the 50. So what was our trading strategy if we were long? We knew that it was going to move in the direction how they opened after that doji. If they opened it lower, it was time to close out the position. So this, again, I keep saying this is not rocket science. The Japanese rice traders have shown us these pieces of evidence of what happens or what the signals are. Again, here's a case where we had kind of a fry pan bottom. It failed to break out. If you were long, should have been back out of this position, or at least back out right here. Because once you close below the T-line, the prospects of going lower improve dramatically. How do you judge what the choices are tomorrow for Micron? Well, pretty much right now there's nothing here. If you're short, I would be staying short because your stochastics are still heading down. You broke that level. What would be the next analysis? Probably watching to see where the support level is, which means you're probably heading in this new direction. Or not this new direction, to this new support level. So best to wait for new patterns to develop. Yeah, there's nothing right now in Micron that tells you want to be a buyer. The stochastic's heading down. You've had sell signals, a failure. They're still selling it off. You don't get into this until you see a buy signal. We buy some stocks with a close above the T-line, but the next day it trades below the T-line, then what to do? If it's negating your buy signal, you close it back out. The T-line is the black line. So your moving averages on here is the blue line is the 50-day simple moving average. The red line is the 200-day simple moving average. The reason those two moving averages are on this chart is because every major money manager around the world uses those moving averages to make their decisions about their portfolio. The black line is the T-line, the 8 exponential moving average. We call it the T-line because it's got a very simple process. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. With the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. Aftermarket for this up 63 cents doesn't mean all that much. If you go back a few weeks, the trend line is where it bounced off of. Well, yeah, that started a few weeks ago. That's so it broke through that support level. All right, let me jump into a few more here. We also illustrated Labu. This is why you want to know your signals. This right here is called the Hangman. So if you were long, after bouncing up off the 200 and had this signal, only one thing to do. It had to open positive and trade positive to stay in it. If it opened lower, it was confirming the selling. You closed out the position. So there's 12 major signals. Out of the 50 or 60 candlestick signals, if you just learn the 12 major signals, not only will you have more trades than you'll ever be able to handle, but you'll be able to analyze what is happening in that price trend based upon also knowing what the human nature was or the investor sentiment that created those signals. That combination puts you in control of your trend analysis with the same outlook as somebody that's been trading in the markets for 50 years. see, what am I doing? Okay. So a lot of people say, well, you're looking at signals or patterns afterwards. Do they always work? Anytime you see a candlestick doji in the overbought condition, if it opens lower the next day, the probabilities, Jake, a hangman will occur at the top of a trend. A hammer will occur at the bottom of a trend. They're the exact same formation, it's just where they occur in the trend. Be the same scenario as an inverted hammer. An inverted hammer is the same as a shooting star, but an inverted hammer occurs when the stochastics are in the oversold area. A shooting star would occur at the top of the trend. Same formation. So when you're looking at the 12 major signals, you're basically looking at 6 long signals, 6 short signals. And most of them are the exact replica of each other. They just occur at different stages of a trend. And I was trying to go back. That's why having the records of, here's a kicker signal. This is your strongest signal. This happened in ARWR today. And notice where this broke out, above any of the trading range. So what's this tell us? There's been an extremely strong change of investor sentiment, which is more than likely going to create a very strong uptrend. Where are the kicker signals? This is a kicker signal. This is what you expect after a kicker signal, strong price move. Is an inverted hammer the same as a gravestone? It could be. A gravestone doji is the ultimate inverted hammer if it's at the bottom of a trend. Oh, Don, the kicker signal is the most powerful of the reversals. Then we have what we call the best friend signal, which is a doji gap up. And then you have not so much the signals, but as well as the patterns, like a slow curve breakout, a fry pan bottom breakout, a J hook. Again, these are all patterns that set up consistently and have consistent results. Again, that the Japanese rice traders have illustrated for us over the last 400 years. And it's based upon one very simple factor, that human nature works the same way time after time. What is this one? CLDR. Get a kicker signal today. So this is what we expect coming out of a fry pan bottom. Here's your fry pan bottom. Notice where the breakout level was, right about here. And what's our strongest signal? A kicker signal is where this day opens here and closes here. The next day they gap it up at or above the previous day's open and goes the opposite direction. Jake, anytime I see a kicker signal, and this is the benefit of having our Candlestick chat room each day, is people say, oh, look at XYZ. It's gapped up and trading positive. Well, if I can see that it's doing a kicker signal, I'll buy it as fast as I can. Now, this is where, do you buy it here? Do you buy it here? Do you buy it here? A lot of people say, oh, man, I don't want to buy something that's gapped up 5, 10, 15, 20%. Well, you do if you know what signal it's doing and what type of pattern it breaks out. So this is a perfect setup. There's your fry pan bottom with a kicker signal breakout. Now, do I want to be buying here or here or here or here? Well, if I flip to my 10-minute chart, And there's the initial move up. I might be buying here, but I wouldn't be buying here. Looks like it's backing off. But what happened when it got to the 10-minute T-line? They're buying again. So I'm not afraid to be buying here. Might be buying here, might not be buying here. Could be buying here because notice what it was telling us, that they weren't closing back below the T-line. The bulls were definitely in control. This is kind of the same way that you day trade if you're trading futures. I trade commodities during the day. This is the 10-minute chart on lean hogs. And today they gapped it up, as we saw in the daily chart. And so how long did you hold this? Well, notice what they did not do during the day. They didn't close it below the T-line. Now, if they'd gotten here and then did a bearish Doji sandwich, yeah, probably would have come out of the trade. When would I get back in? When they came back up through the T-line. So remember, the candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. It all depends on how fast you want to trade. You could trade off the 1 minute. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. I'm getting a little bit older, not too much older. I may just trade off the 10-minute chart. So this is what you should expect coming out of a fry pan bottom. You can see right about here is where the indecisive trading started. You could be buying here. How long do you hold this? As long as it stays above the T-line, with the caveat that the further away you move away from the T-line, the higher the probability it's going to come back and test it. So you're in the overbought area. If they move this up big tomorrow, I just flip to my 10-minute chart and start watching to see when the 10-minute chart means, Brian, I tell people, if you learn from your mistakes, I'm one of the smartest traders you're ever going to come across. I've made every mistake you could think of. Now, fortunately, with candlesticks, I can see where the probabilities now are in my favor. So if this started trading up strong tomorrow, further away from the T-line, then I'd flip to my 10-minute chart to see when, see that as long as it stayed above the 10-minute T-line, I was all right. It looked like a close below the T-line on the 10-minute on lean hogs. Yes, but notice where right in here, but notice where you are at during the trading day. You're right near the end of the day. So even if you're trading right here and it started trading lower, what would your daily chart look like at that time? It would still be trading up here somewhere. So your daily chart is still telling you you stayed up above the T-line. If you came out with on the 10-minute chart, let's say you bought here and it ran up there. This is what we call a flutter kicker signal. Notice what happened today on CTRP. A flutter kicker signal is a derivative of the kicker signal. So it did a doji today. And what's our simple rule of the doji? If you're a day trader, this is a perfect setup for a positive trade tomorrow. Because if it opens positive, what are our probabilities? It's going to trade positive. As a swing trader, if it opens positive and it starts trading positive, it's going to create a green candle. And if it creates a green candle, after opening positive, it becomes a flutter kicker, because if you took out this little flutter, you basically have a kicker signal. That usually indicates a very strong change of investor sentiment. So these are the type of patterns that you look for. Look at our strong buy signal right here. There's a simple candlestick rule that the bigger the signal, the more compelling there's been a change of investor sentiment. So it closed right here. Now, probably didn't see this during the day, but when we did our scans at night, there was a big percent move. So what's our criteria the next day? If it opens positive, confirming the signal, it's also telling us the T-line's not acting as a resistance. We want to be a buyer. Well, they opened it lower. This didn't execute. Well, the next day, they closed above the T-line. That was yesterday. So today, when they started trading positive, you could be buying it because there was your signal finally confirming. So the day after a kicker signal, if it opens above the close, you could buy. Would you set up a stop? If so, where? Because of the strength of a kicker signal, usually I don't want to see it close back below the open of that first big candle of the kicker signal. Joel, hold on to your individual charts. When we get done, I'll tell Jim to do the double line and then type in what symbol you want to have analyzed. On a positive open, would you buy immediately or wait 30 minutes? Mike, I don't care who's buying during the first hour. What was the one that we were just looking at? CTRP. If I was buying this one tomorrow and I saw it open here, I may give it 30 seconds, 90 seconds, 3 minutes. I want to make sure they're buying. What I don't want to see is it open positive. How come I can never remember a symbol? I don't want to see it open positive, then immediately start selling off. If it does, my buy point is if they come back up through that open, then I can be buying it. How to identify that when will the trend line or SMA resistance will break? Oh, if it closes right on, what was the one that we just did? This one showed us that they broke it. If it opened positive, it was telling us they were confirming the signal and they broke the T-line. Well, they didn't. The next day, they closed above the T-line. They told me I had a buy signal and a close above the T-line. If it started trading positive the next day, I wanted to be buying it. Because this is what's telling us the bulls are starting to take control. A positive open here and starting to trade positive just confirms that. EGS. Same scenario, bullish engulfing. Closed right on the T-line. Next day it didn't confirm. The next day we had another bullish engulfing. Closed above the T-line. So if it opened positive, more than likely a bullish engulfing, stochastics coming up, and close above the T-line and positive trading, they are still taking this one higher. Loma, kind of the same scenario. Bullish Harami. Didn't confirm. Bullish engulfing. May not have bought it today until we saw it close below the T or above the T line. But now we have a bullish Harami, hammer signal, bullish engulfing, close above the T line, broke this downward trend channel. Now you can think about buying this one on positive trading. So everybody, all the professional money managers tell you, let your profits run, cut your losses short, but they never tell you how to cut your losses short and let your profits run. Very simple criteria. If this opened positive tomorrow, it should be trading positive. Where should it not close? Back below the T-line. If it does, you close it right back out again. If you buy within 30, 45 seconds, how do you accomplish this? You create a trade and save it? No, Roy, I use Thinkorswim. I can type in an order in about 7 seconds and hit buy. How do you evaluate whether there's a change in investor sentiment or just one day's order flow imbalance when an institutional places a big order? Because we're going based upon probabilities. If you're in a downtrend in the oversold area and you see a candlestick buy signal, the Japanese rice traders say you probably have a reversal. There are times where you might be in a downtrend and see a big up day. Yeah, if it's not in an extreme area of the you're overbought or oversold, that might be just somebody closing out a position. But the probabilities say that if you see a candlestick buy signal in the oversold area, prospects are pretty good that you've had a reversal. If you see a candlestick sell signal in the overbought condition, probabilities say that there's probably going to be a reversal. When swing trading, do you also buy and sell during the day or just stick with the daily chart? Joe, I'm usually swing trading my bigger positions, meaning stock positions. My normal trading is trading every 2 to 10 trading days. That's about how long my positions stay on. Now, if we get a steady eddy, which we'll get to, I might hold that position for a month as long as it doesn't close back below the T-line. What search did you do to come up with 3 examples? 3 examples of what, CB? These. Oh. I don't remember. Oh, probably just a simple scan saying which stocks had the biggest % move today. These all probably came up on those scans. There's a kicker signal in fun. So what makes this significant? Well, you don't really have anything going on except for the fact that you had a kicker signal. So if this starts trading positive tomorrow, what's it telling us about this breakout area? Probably breaching it, then you've got a new dynamic. Why would we be going after it? Because it did a kicker signal today. I did a % move up today during the day and got 200 stocks. Yeah, CB, what I do is I take my trading universe and I scan it by the biggest % moves to the upside today. And usually by the time I scan down through 50 or 60 positions, which I can do by hitting click, 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 click. Anytime I see one that looks good, I flag it so I go back and look at it later. But I can go through 50 or 60 charts just visually analyzing which ones have the best signals in probably a minute and a half. Now, if you're just learning candlesticks, doing the same scanning techniques, it may take you 10 to 20 minutes each day to find the best trade setups for the next day. And we'll do a scanning lesson here pretty soon. The weather's starting to turn bad. So here's when do you take profits? Well, look at our little fry pan bottom slow curve breakout. Where do you put your stop loss when you're in the overbought condition? And look how far away you've moved from the T-line. You definitely don't want to see it trade back below this level. If they gap it down from up here, back below here, what do you want to do immediately? Close out the position. Because if you're in an uptrend, the bears shouldn't have enough strength to gap it down below the previous day's open and close out, or because if they have that enough strength, where do you think the first target's going to be? Back to the T-line. Again, the further away you move from the T-line, you get more conscious of getting ready for taking profits. If you're swing trading, do you typically buy options or the underlying stock? Bruce, depends on the size of the account that I'm trading in. If I've got a $500,000 account and we're trading 12 positions, that whatever that turns out to be, $40,000 a position, I'm usually trading the stocks. If I'm trading a small option trading account, I'll be trading options. So it all depends on, it's not what I typically do. It's based upon what do you like doing. Or if you're an option trader, you're still using the same charts because you're trading the underlying entity. How do you determine where the 200-day moving average is on a chart when it does not show? You just make your chart smaller, meaning more time on it until it comes on. Jake, bring it up after I tell Jim to do the double line. We've still got a bunch of illustrations here. There's your kicker signal on BSI. How long do you hold on to this until you see a sell signal and a close back below the T line? There's your kicker signal on Jern. And where did this kicker signal occur? Right here, kind of a fry pan bottom breakout area. So what's your criteria? You just stay long until you see a sell signal and a close back below the T line. Yes, TLYS is a bearish kicker. So the signals work just as effectively on the bullish side as they do the bearish side. We also will be showing people, again, which signals and patterns work most effectively. This is ODL or FL, Old Dominion. You can see what happened when it came out of this fry pan bottom. These are what we're looking for. So we're buying right in here, or maybe even right here, knowing that if they broke out, that's where your big moves are going to start occurring. Was there a sell signal? Yes. Look at your Hangman, Doji, Gravestone Doji, gap down. You would have been out right here. If you had held on for some reason, now you probably should have been out somewhere in here because that told you when they opened lower after a Doji, they were heading down to the T line. So right now you should be out of this, and maybe probably wouldn't be short because you're getting toward the oversold area. What was the sell signal? That one right there with the Doji gap down. Okay, I've heard you say a couple things that seem contradictory, all right? When you get an overbought and far above the T line, you close out after you close before the last up day. And B, you don't sell until you have a sell signal and a close below the T line. Now, remember, we said the further away you move from the T line, the more likely it's going to come back and test it. So if I see something, which one was that? I forget. No, that wasn't. Which one was there? Can't remember. The one that did a kicker signal, but it was well above the T line. Oh, TLYS. This magnitude of distance between here and here told me that as soon as I saw a sell signal, I could anticipate it was going to come back and test the T line. Now, if I owned it here and saw a sell signal, I'd wait for it to close below the T line because it was right there at the T line. Does that clear things up? CDMO, again, we bought this one because of the fry pan bottom breakout. SCVL. This is what you can usually expect right here at the end of a fry pan, a little whipsaw. But this is what we're looking for, is that big breakout. That's why this one is so compelling, because you can see what happened right here at this fry pan bottom, kind of a whipsaw, and then the breakout. This is why when we do our training, we show how the Doji becomes very effective. Because look at our best friend signal, smack dab off the 50. A Doji gap up. And how long do you hold on to this? Until you see a sell signal and a close below the T-line. So if you're long on this one, you stay long. But now what's our next expectation? If it opens positive, it's going to move in the direction how they opened after a Doji. You've got a J-hook pattern. So that even tells you that if you if you miss this move, you can get ready to buy the J-hook pattern, because we know this move right here will be the same magnitude as this move right here. So even if you miss this, you can take advantage of the next move based upon that pattern. INO. There's your best friend gap up. Kind of consolidated here. Then there's your left-right combo through the 200. Now you've got a bearish engulfing signal in the overbought condition. You definitely don't want to see this trade back below the T-line. That would tell you the bears are in control. We also demonstrate how the belt hold signal. Belt hold's very simple to identify. Here's your trading range. They gap it way out of the trading range and bring it back up into the trading range. In this case, the term is into the trading range. Sometimes it does a piercing signal, sometimes it does a bullish engulfing signal. But the fact that they opened it way down here and brought it back up basically told you the bulls wiped out a lot of sellers, so there's not as many sellers in the way anymore. Your next price move is in progress. Is there a way to scan for Doji followed by a kick or a gap up? Yes. Yes. So if you're scanning for Dojis in the oversold condition, meaning looking for a Doji that occurred when the stochastics were below 20, now I can put that on a watch list, and if it gaps up the next day, I can be a buyer. But more than likely, I'm not going to see it at that point. I'm going to see it at this point, right here, where I've done my scan, and this was a big percent move that day, and I looked to see that he did a Doji gap up. I'm getting ready to buy on positive trading the next day. Oh, Rob, you'll have to ask Jim how to do that. So, what were we looking at? The belt hold signals. Again, tells you they've wiped out a lot of sellers, which means there's not as many sellers in the way. So, AMBA the other day did a belt hold. We started buying the calls just because of the probabilities. Now, look where it is. Right here at the top of this breakout level. If this opens positive, that tells us we're going to be in a good strong uptrend because it broke out of this range. DRNA. A belt hold can work in the opposite direction too. When they gap up and bring it right back down into the trading range, that means the sellers took control. If it opens lower the next day, you want to be going short. I think that same scenario occurred over here. Look how they gapped bike up buckle. Came back down and did a bearish belt hold, bearish engulfing signal, starting that downtrend. So these are all signals and patterns that once you learn them, your investment probabilities become dramatically improved. Well, what's going on here? Funko. I know they've been following this one in the chat room. Notice how when it came out of this fry pan bottom, there might be a day that you would have closed out. However, the longer a trend continues, but if I have a day like this, notice that there wasn't a real sell signal here. This was just a down day. Now, when it first day in a month that it closed below the T-line, what's my criteria? If I'm staying long, it better open positive and trade positive the next day. If I closed out the position, I can always buy it back when it comes back up above the T-line because that tells me my uptrend's up. Ramon, I'm usually working off the 10-minute chart. And I'm trying to think. Oh, I didn't day trade very much today in this because when it gapped open, I knew I was in an uptrend. And so I didn't really have to trade it all that much. I was ready to take profits in here if it started coming back, which it really didn't. So on days like this, opens here, here's my sell signal. I take profits. Where's my next buy? If it comes back up through this level, it didn't. Now I go short. When do I start covering? When I see the first signs of buying in the oversold area. So now on my 10-minute chart, I want to be a little bit more precise. As soon as I see something setting up on my 10-minute chart, I can flip to my 5-minute chart, say, all right, what's happening here? That gives me a little bit quicker view. What's the green line that seems to hug the candlesticks? That's the 3T line. And the 3T line becomes more relevant if you start moving too far away from the T-line. So notice over here, lean hogs really took off, then did a dark cloud, and then started trading back below the 3T line. Told you they were probably coming back to test the T-line. So that told me I wanted to take profits and then maybe start going short. S-Fix. Another one that we bought. Well, what are all these things? Geez. Coming out of the fry pan bottom, just a nice steady eddy as long as it stays above the T-line. DNLI. Came out of the bobble pattern. Notice how this one started. There's your best friend. Kind of a little mini scoop pattern. Failed here at the 50, but notice what it did when it pulled back. It never closed below the T-line. You could be buying again here because now you have what we call your bobble breakout. A bobble breakout is a more defined J-hook pattern, but if you took the 50 out of here, it's just a J-hook pattern. But the fact that you had the 50 here, you could see much more clearly where they were selling, and then when they broke back up through that level, that told you your uptrend remained in progress. How long do we hold on to this? As long as it stays above the T-line. There's a nice steady eddy in progress. These are what you're looking for after a good, strong price move. Oh, pshaw. Oops. There's your best friend gap up. You broke out of this little resistance level. Note that it kind of did a wedge formation. Broke out. This is your 45 degree. So once they break out, this is a common price move, a 45 degree with a very simple parameter. You stay long, as long as it stays above the T-line. All right, so these long positions, or candlestick signals showing the long positions, work just as effectively on the short side. There's your bearish engulfing. There's your bearish doji sandwich. There's your wave 1, wave 2 going into wave 3. That's M-chip. This is smegmo, SGMO. Notice your best friend gap down. That usually tells you there's very powerful selling based upon that signal. JWA, there's your bearish doji sandwich. And where did this occur? After they closed below the T-line and failed here at the 200. So, again, we have the advantage of seeing exactly what investor sentiment is at specific levels. There's, again, kind of a bearish doji sandwich. This is Win Resorts. You can see how it was rolling over. You can see your doji, and then it closed below the T-line. That told you the prospects of a downtrend. When you see a best friend, yeah, I'm looking at it. If I see it, I'm buying immediately. More than likely, I won't identify a best friend until that night when we do the scans, either for the biggest percent moves, either going long or going short. MLCO, you can see the rollover. You can see the close below the T-line. That's, if you were long, you definitely closed out here for two reasons. One, you can see that it was closing below the T-line. Two, you can see the trajectory was going against you. It was time to come out of that position. When they gapped it down the next day, you might be going short, or when they gapped it down today, you might be going short. Again, if they gapped it lower today, what would that tell you had setting up? At least a bearish doji sandwich. So everything we look at is based upon the probabilities of a price move based upon human nature, that once they close below the T-line, the probabilities are pretty strong. You're heading lower. Watt, big bearish belt hold, lower open. Implication is they're going lower on this one. So there's just very simple signals and patterns that will definitely always put you in the right direction at the right time. So I guess, do we have a sign up for the 2-day weekend? The 2-day weekend training is going to be on the 15th and 16th. That's where we go through everything from start to finish. So things that you're seeing on these type of trainings or sessions where you're getting bits and pieces, when you see it all in a chronological order, it makes sense. And it would the main benefit that you get from one of these sessions, 2-day weekend or 2-day weekend sessions, is that once you're done, you're going to have a completely different perspective on what moves prices. And you're always going to be able to look for things that are going to put the probabilities in your favor. So I guess with that, is there any additional questions? Is the 2-day training the same or similar to the one in the past? So that yes. So if you've done it in the past, you attend for free. What are the hours for the weekend? We usually start around 9:30 in the morning, and we usually go somewhere around 3:30, 4:30, 5 o'clock in the afternoon, as long as people don't fall out of their chairs. There, Becky just put the link up. DNLI, is that a dark cloud warning signal? Could be. It's not quite a dark cloud, and it's not quite a bearish engulfing. Remember, a dark cloud has to open above the high of the previous day. And it's not a bearish engulfing because it didn't close. It's just a down day in an uptrend. Now, if it does open lower, which would probably be a function of if the markets look like they're opening up weak tomorrow, Yeah, it might be time to take profits because it probably indicates they're at least going to come back down and test the T-line. Joe, yes. The Friday before, everybody will get the password for coming in for the 2-day. AGX. Yes, that is a good best friend signal with an inverted hammer doji. Now, that was obviously a big move, so you might expect a 45-degree off of there. Yeah, so that's, again, if you got, say you got 25, all right, you pick out the ones that show the best, that might have gapped up above the T-line or through the 50 or broke out through a trading range, something that tells you there's been a dramatic change of investor sentiment. Okay, I guess with that, Jim, go ahead and do the double line. And then 4.8 seconds. Oh, JB, they're the same as what they did right before the close. Reggie started rolling over a little bit. I would have closed this one out today because it closed below the T-line, and look what's happening to the trajectory up here. So if you stayed long, it has to open positive tomorrow and trade positive. If it trades lower, close it out. HTRX, that's not anything to write home about. Boy, just not enough movement in it, JP. I'd probably be someplace else. If anything, you can short it on weakness, but your percentage return, as you can see, is not going to be all that spectacular on that stock. AVEO, get a doji right here on the T-line. It has to open positive and trade positive. This is your classic. There's your fry pan bottom, breakout. Now you're looking for the J-hook pattern. Las Vegas, stay short. Ever since kind of your Bearish doji sandwich, stay short until you see a buy signal. Microsoft. Never trade Microsoft because it doesn't have a big percentage move. Right now, I would suspect they're coming back to test the 50-day moving average. Cisco. Cisco has to open positive to stay long. If it opens lower, close out the position. DRXC, just stay long as it stays above the T-line. B-cell, I would have closed out today with it closing back below the low of the gap-up doji. Tells you the buyers aren't there. FXE, the euros, it's flat as a pancake. It's sitting right smack dab on the T-line. I don't know what to tell you there. Probably wouldn't be trading this one way or the other. Ross Stores. Just stay long as it stays above the T-line. VRTX. Well, this thing is slowing down. This one you get ready to go short on weakness, but probably back to the 50-day moving average. Kara, nothing there. Just not a good-looking chart. Don't even really have any major pattern. And Chipotle, we covered our short position when it hit the 50. Wouldn't be going long until they can get it up above the T-line. Kathy, I don't think that one's going to come up on this system. No. Whoops, hold on. So if somebody wanted the link, there's the link again for the weekend. NSG, why are these not coming up? Oh, yeah, let's see. I don't know why these aren't. Let's see. Visa, I would be out of, but I wouldn't be back in it until it gets back up above the T line. Square, you just stay long as it stays above the T line. ALIM, oh, that one's in the process. You better see a lot of volume on this one. I'd be a buyer of this one if it started trading above the 200 tomorrow. SUPV, you can be buying this one because of the big bullish signal now trading up above the T line with the expectation that your first target is up here toward the or at the 50-day moving average. The S&P 500, it's trading below the T line. I would suspect some more backing and filling on this one. And the 20-year bonds, you can see you're kind of a big wedge formation, so it's really not going anywhere. You might see a little bit of a pop up to the 50, but it doesn't look like anything that looks like a real good trader. I don't know why NSG. NSG is just not coming up. BABA, you stay short. Again, there's your big bearish engulfing belt hold. Then there's your dark cloud. Then there's your close below the T line. You stay short until you see a buy signal. Bob, yes, the emotions is going to be all kind of added into to this session. The emotions as well as all the trading rules for each one of the signals. And I'm going to kind of mix in the top traders as we go through each signal. Like when we do the Doji, we'll also take a look at the best friend and the left-right combo. Eli Lilly did a big Hangman hammer signal. This one definitely needs to stay above the T line, so it has to trade positive. If it trades lower, you want to start closing out the position. Netflix got beat up pretty bad yesterday. Tried to come up, failed at the T line again today with stochastics coming down. If you're short, you stay short. If you're thinking of going short, if it comes back down through the low of, or the close and the low of today, you can be shorting it with the expectation it's coming down here to test these lows, which would coincide with the 200-day moving average. CGC, you stay long as this stays above the T line. INSG. INSG. There you go. All right, now, remember, where do most people buy? They buy exuberantly at the top. So if you're long, you set your sell stop just below today's low. It should be opening higher and trading higher to stay in it. Jake, that's because you're now working with a high moving stock. Now, when we do our percent strategies, when you see a big move like this, the probabilities are that if it opens lower tomorrow and you're long, you close it out immediately. And you don't buy it until it comes back up to that level. If it opens positive and starts trading positive, you put your stop at the close, because if it comes back down through there, they aren't taking it higher right now. INSEE, nothing there. If you're short, stay short. But I probably wouldn't even be short on this one. I just wouldn't be in it. And CNAT, same scenario. Wouldn't be in this one either. We did square Costco. Costco's up after hours. All right. 2 points. Yes, you watch if it gaps up. Remember, you're at the top of a trend. If it gaps open and immediately starts selling off, you put your stop at today's close. The logic says if it opens and comes back down through there, it's the sellers have taken control. On the other hand, if it opens positive and starts trading positive, you put your stop at the open. It shouldn't come back down through the open. Caterpillar, just not a good trading stock. If you like it, you can be buying it, but it's not going anywhere. I'd be someplace else. AMRS, another one that has to open positive tomorrow to stay long. PBI, nothing. Wouldn't be long or short this one. You're below the T-line and it's not going there. Starbucks, here's kind of your fry pan bottom with a little belt hold left-right combo. You stay long on this and use the T-line as your stop. AT&T, this one you won't ever make any big money with. If you like it, it has to open positive and trade positive, doing a bullish Doji sandwich. But your percent return is going to be extremely, extremely low. Nike popped up a little bit. I wouldn't be long or short Nike right now. Just nothing there as far as any trade direction. Range Resources, stay short. VITA, you can get ready to go short if it opens lower tomorrow. Notice when they took it up, they failed at the T-line. ESRO needed to open positive and trade positive to get in it. If you're long, you want to see it get up through the 50 pretty quick. If it opens lower, I would close it out and wait to see what it does back at the T-line. Hydra, you just stay long, but it has to open positive tomorrow. PBI, we did that one. Nothing there to get excited about. OPK, another one that I wouldn't be long or short. You can see you're in a big wedge formation. I'd be someplace else right now. AVAV, look for a 45 degree off of here. Kind of in the same trajectory as what it was doing. Tesla started up today but backed off. You can still short this one on weakness tomorrow. Beastie, if you're short this, you stay short, but you're in the oversold area doing a doji. I would cover any short positions on positive trading. I wouldn't be going long. That's, let's see. Joe, yes, that's the biggest bugaboo of most investors. You can have the best trading program in the world, but if you can't control your emotions or you simulate your emotions with your trading analysis, it's not going to do you any good, because that's what makes candlestick signals in the first place, is the usually incorrect human emotions. Crone, you stay long as it stays above the T-line. Looking at the SPY, Raymond. Whoops. Look for it to at least come down maybe in the bottom of the trend channel at this point. EBVG, you stay long, but it has to stay above the T-line. Oh, I know which one I was kept. OCUL is trading up here somewhere after hours, so you just stay long on this one. GG, nothing yet. If you're short, get ready to cover this if it trades back up above today's high. UTHR, stay short. HQH, stay short, but watch to see what it does here at the 50. Amazon backed off. You should be out of Amazon with the expectation they're pulling back, possibly back to the 50. You can always buy it back if it comes back up above the T-line. Mid, stay long on this one. That's a nice little breakout. LEJU, nothing. You should be out of this one with it closing back below the T-line. Can't go short because it's below $2 or below $5. Nugget, you stay short. My blue profits should be ahead, but dumb choices have me in the red so far. Joe, the best way to learn is get smacked around a few times. I did that, as I said before. If you learn from your mistakes, I'm one of the smartest traders you ever come across. V-Ray, I wouldn't be long or short this one. No direction. And MWGI, this one you can be going short. I definitely would be out of any long position. We did Caterpillar. Caterpillar, just not a very good trading stock. It's not really going anywhere. And one more, SWIR. That's a Morningstar signal. You can see where it supported. You can start buying this one on positive trading, and then just watch, make sure it gets through this downtrending channel. V-Ray on a fry pan bottom? No, not really. Notice where it failed. There was kind of your fry pan. Then it closed back below the T-line. That told you it wasn't working. Right now, I wouldn't have this anywhere right now. Just nothing there. UVXI, UVXY. That's a fry pan bottom. If you like it, you can be buying it. Obviously, watch to see what it does at the 50. All right, everybody. We got a mixed market, but it's telling us that they aren't selling it off yet. So you just kind of stay long. And be specific on your sectors.